Hey everyone, welcome back to Corporate Decoder, the place where we take those dry corporate filings and turn them into something a little more digestible, maybe even a little juicy. Today we're diving into the One Group Hospitality's latest proxy statement. Now, this isn't your typical restaurant review, but we're hoping to find out if this company is cooking up success or just a recipe for disaster. Let's get started. First, there's a letter from the CEO dated April 2025, where he talks about a transformative year due to the Benihana and RIA Sushi acquisition in May. He says it enabled them to achieve scale they could not have organically, meaning without buying other companies. The CEO says full-year revenue increased over 100% to $673 million. That's double their revenue. He mentions full-year operating income increased 16% to $11 million. Operating income is basically profit from their business. Adjusted operating income, which excludes some costs associated with the Benihana deal, increased over 300% to $39 million. The growth in adjusted operating income shows they're becoming more profitable, at least before considering those acquisition costs. The CEO lays out the priorities for 2025. First, driving sales across all brands. The company wants to create great memories for guests and deliver unforgettable experiences. The company is also evolving their digital assets by actively communicating with guests across digital platforms and showcasing innovation and keeping guests connected through their mobile devices. In 2025, they're launching a new customer loyalty program with personalized offerings for birthdays and milestone moments. The underlying goal is to convert those who dine with them once or twice annually into more frequent visitors. The second priority is successfully integrating Benihana and delivering on cost initiatives. The post-acquisition integration efforts delivered strong results in 2024. They achieved significant synergies through streamlined operations at both the restaurant and corporate levels and projects. Annual synergies of at least $20 million, with a majority already implemented or identified. Synergies is a fancy word for savings from combining two businesses. The third priority is focusing on their next growth phase, balancing company-owned and asset-light development. They opened 5 company-owned restaurants and 1 managed STK in 2024. During 2025, they plan to open 5 to 7 restaurants, including asset-light growth of managed and licensed STKs and franchise Benihanas. Basically, they want to own some restaurants, but also franchise out others to grow faster with less investment. The fourth priority is maintaining balance sheet flexibility and returning value to shareholders through share repurchases. They finished 2024 with over $70 million in liquid resources. Combining cash on hand, short-term credit card receivables, and the availability under the revolving credit facility, which remains undrawn. They also returned over $3 million to shareholders through share repurchases. Moving on, there is a notice of the 2025 annual meeting on May 20, 2025. The stockholders will vote on electing directors, ratifying the company's accounting firm, and executive compensation. Here are the board's recommendations on how to vote. For item 1, electing 3 Class 3 directors. The board recommends voting for the nominees. For item 2, ratifying the appointment of Deloitte and Touche, the named executive officers. The board recommends voting. For item 3, the non-binding advisory vote on the compensation of the named executive officers. The board recommends voting for. For item 3, the non-binding advisory vote on the compensation of the named executive officers. The board recommends voting for. Here is the board diversity matrix as of March 31, 2025. There are 9 directors, 7 are male and 2 are female. 1 director is African American or Black, 1 is Hispanic or Latinx, and there are 7 white directors. Let's dive into the board's qualifications. Emmanuel Hilario has senior operating and financial executive expertise, hospitality experience, knowledge of the company's industry, public company directorship experience, domestic and international market development experience, corporate strategy development and corporate governance expertise, and risk management expertise, Jonathan Siegel also has senior operating executive expertise, hospitality experience, operating knowledge of the company's industry, public company directorship experience, domestic and international market development expertise, corporate strategy development expertise, and corporate governance expertise. Dimitrios Angelis has senior operating executive expertise, senior HR compensation, and talent development expertise. He also has public company directorship experience, enterprise level information technology expertise, domestic and international market development expertise, corporate governance expertise, and risk management expertise. Corporate governance expertise and risk management expertise. Corporate governance expertise and risk management expertise. Corporate governance expertise and risk management expertise. Operate governance expertise. Corporate governance expertise and risk management expertise. Eugene Bullis has senior operating and financial executive expertise, senior HR compensation and talent development expertise, public company directorship experience, enterprise level information technology expertise, corporate governance directorship experience, enterprise level information technology expertise, corporate governance expertise and risk management expertise, corporate governance expertise and risk management expertise, corporate governance expertise and risk management expertise. Susan Linton-Smith has senior operating executive expertise, senior marketing and sales executive expertise, hospitality experience, operating knowledge of the company's industry, public company directorship experience, domestic and international market development expertise, corporate strategy development expertise, and corporate governance expertise. Heidi Olinger has senior HR compensation and talent development expertise, hospitality experience, operating knowledge of the company's industry, public company directorship experience, domestic and international market development expertise, corporate governance expertise, and risk management expertise. Autumn Majal. Michael Saria has senior operating and financial executive expertise, hospitality experience, operating knowledge of the company's industry, public company directorship experience, domestic and international market development expertise, corporate governance expertise and risk management expertise, corporate governance expertise and risk management expertise. Scott Ross has senior operating and financial executive expertise, senior HR compensation and talent development expertise, operating knowledge of the company's industry, public company directorship experience, corporate strategy development expertise and corporate governance expertise, and corporate governance expertise and risk management expertise. James Chambers has senior operating and financial executive expertise, senior HR compensation and talent development expertise, operating knowledge of the company's industry, public company directorship experience, corporate strategy development expertise, and corporate governance expertise and risk management expertise. And corporate governance expertise and risk management expertise. Now let's discuss corporate governance. The board is divided into 3 classes with staggered 3-year terms. This means only a portion of the board is up for election each year, providing continuity. The company also says that 7 out of the 9 board members are independent. The audit committee has 6 members, including Bullis, who is the chair. They are responsible for retaining and terminating the services of their accounting firm. In addition, they review the annual financial statements, consider matters relating to accounting policy and internal controls, and review the scope of annual audits. The compensation committee has 4 members, Angelis, who is the chair, Bullis, Ross, and Cerullo. Their responsibilities include reviewing, approving, and making recommendations regarding our compensation policies. They also administer our 2019 Equity Incentive Plan. The compensation committee is responsible for the determination of the compensation of our Chief Executive Officer. The Nominating and Governance Committee has 5 members. Serial, who is the chair, Bullis and Chambers, and Ms. Linton-Smith and Ms. Olinger. Their responsibilities include evaluating and making recommendations to the full board as to the size and composition of the board and its committees, and evaluating and making recommendations as to potential candidates for election to the board. Here is their policy on pre-approval of audit services. The Audit Committee has responsibility for appointing, setting compensation, and overseeing the work of our independent registered public accounting firm. The Audit Committee has established a policy to pre-approve all audit and permissible non-audit services provided by our independent registered public accounting firm. Here's some juicy information on executive compensation. First, let's look at Emmanuel Hilario, President and Chief Executive Officer. His salary for both 2024 and 2023 was $700,000. His bonus for 2024 was $350,000 for both years. His non-equity incentive plan compensation, which is like a cash bonus, was 0 in 2023. It was 0. That might seem counterintuitive with the better financial results for 2024, but it is likely due to non-financial metrics and company discretion. His stock awards are $350,000 for both years. His non-equity incentive plan compensation, which is like a cash bonus, was $0 in 2024, and 59 financial metrics and company discretion. His stock awards are $350,000 for both years. His non-equity incentive plan compensation, which is like a cash bonus, was $0 in 2024, and $50,427,462 in 2024, and $1,004. Talloy, Chief Financial Officer, had a salary of $335,961 Tamburi 4 and $315,866 in 2023. His bonus was $25,000 in 2024 and $0 in 2024 and $0 in 2023. His stock awards were $91,250 in 2023. His stock compensation was $6,954 in 2024 and $0 in 2024 and $3.78. And $8 when $1 solar at $225,000 in 2023. His stock awards were $91,250 in 2023 in Oberse in 2023. Jonathan Siegel, Executive Chairman, had a salary of $350,000 in both 24 and 2024 and 2023. His bonus was $0 for both years. His stock awards were $130,125 and $60,160 in both years. His non-equity $7.4 and in 2024 and $60,160,162 and compensation was $59,063 and $163 and 2024 and $562,160,000 in $68 and $1 in dollars with $591 with $80 and $2087 40 in 2024 and $560,168 in 2024 and $11,080 Oz in 2024 and $50,60,168 in $28 in 2024 and $11,823 and $60,160,163,123 Here are their adjusted EBITDA numbers for fiscal year 2024. The one group had a net loss of $16,000, $6,000, $3,000. Interest expense was $31,000, $309,000. The benefit of $4,009,000. Depreciation and amortization was third-based compensation was $6,000 and $17,000. Transaction and exit costs were $9,326,000. Transition and integration expenses were $39,000. Hash rent was negative $38,000. Depreciation and amortization was $34,000, $96,000. Transition and integration expenses were $36,000. Transition and integration expenses were $1,099,000. The benefit for inconfetti false as in $17,000. Transaction and exit costs were $9,329,000. Other expenses were $1,109,000. Expenses were $24,109,000. Time to check out the outstanding equity awards at fiscal year end. Emmanuel Hilario has 300,000 shares exercisable with an exercise price of $2.42, with an expiration date of October 30, 2027. There are also 68,000 shares exercisable with an exercise price of $2.99, and an expiration date of February 18, 2029. And lastly, $81,000 in dollars and TB1.61 in dollars and dollars unlikely only 9 shares or units of stock that have not vested. The number of securities to be issued upon exercise of outstanding options, warrants, or rights is 2,284,500 and. A number of securities remaining available for future issuance under equity compensation plans is 2,804 and forfender issuant dollars and 849. Let's look at the big shareholders. Cannon Wealth Management owns 4,863,312 shares, or 15.7%. Hillpath Capital owns warrants for 2,794 shares, representing 6.7%. We also have a section on Code of Conduct and Ethics. The company has adopted a corporate code of conduct and ethics that applies to all of our employees, including our Chief Executive Officer, Chief Financial Officer, and Chief Accounting Officer that is available on their website. So what's the takeaway here? The one group had a transformative year, mainly due to acquisitions. Revenue is up big time, but profits were only up if you ignore the acquisition cost. The board has a lot of experience, especially in the hospitality sector. Executive pay is generous and the top shareholders are a mix of investment firms and insiders. Overall, it looks like the One Group is trying to grow aggressively, but those acquisitions can be risky. It's key that the executive team can integrate and manage their acquired businesses. Thanks for watching Corporate Decoder. If you found this video insightful, be sure to like, comment and subscribe for more deep dives into the world of corporate filings. We'll see you next time.